Okay.
Hello, everyone, and welcome to the Mainstream Mortgages podcast. My name is Colton Boudreau, and I'm here with my business partners, Peter Paley and Derek Vendel. Today's topic is refinancing: when to do it, why to do it, what is a refinance. So let's dive right into it. Peter, what is a refinance?
A refinance is when somebody wants to restructure their mortgage to access home equity. So the main reasons to do that would be to maybe consolidate some debt, make a major purchase like a car or boat, or even to do some home renovations and tap into that home equity.
So, Peter, when I'm looking at my mortgage and I don't know what the difference is between a renewal or a switch of the mortgage and a refinance, can you further explain that?
Sure. So I'm going to direct you to episode 10 of Mainstream Mortgages podcast for more information on renewals and switches. But the renewal or the switch, the renewal just keeps your mortgage going on. Your term is expired and you're going to select a new term with your existing lender. A switch is when you're doing the same thing, keeping everything the same, but moving it or transferring it to a new lender.
Okay, so Derek, why do homeowners typically look at refinancing?
Well, like Peter kind of alluded to, if they wanted to do a large renovation, they could access home equity to do that. Maybe they want to consolidate some debt. They can roll their car loan into the mortgage to kind of, yeah, consolidate debt and get lower monthly obligations that way. Another reason is a refinance isn't necessarily just accessing home equity. It could also be that you want to keep your home equity the same, but increase the amortization of your mortgage, which would then lower your payments. So that's another reason why you might do a refinance. Maybe you're looking to lower your mortgage payment to access better cash flow for your finances.
Can I refinance at any time, or do I have to do it at renewal?
Anytime. The only difference from doing it at renewal versus in the middle of your term is that when you refinance in the middle of your term, you're going to have to pay a prepayment penalty.
Okay. So going off of the prepayment penalty, Peter, are there any other costs associated with refinancing? Could you allude to something
Yeah,
along
for
those
sure.
lines?
So, of course, using a mortgage broker is almost always complimentary. We get paid by the lender in most cases. Only in a few cases would there be a lender fee or a brokerage fee, maybe in 5 or 10% of the cases. Other legal fees you can expect. There's always a legal fee to re-register the mortgage. Some lenders, depending on the value of your house, if they disagree, may call for a full appraisal. And again, as Derek alluded to, there could be penalties and discharge fees from your existing lender.
And how much equity can I take out of my house? What's the rule of thumb there?
So typically, you're allowed in Canada to borrow up to 80% of the appraised value of the home.
Right. Okay, makes sense. Um, Peter, what would you say are the most common mistakes made when thinking about refinancing or structuring a refinance? Um, what do you think homeowners should be aware of?
So, refinancing is a really great tool again to tap into that home equity. And I mean, I think you need to be honest with yourself as a client looking to do this, is why you are refinancing. So, in the case of debt consolidation, sure, you're adding maybe 50, $100,000 to your mortgage. You're probably re-extending your amortization back to 25 or 30 years. And the whole idea of this is to make your payments lower so you can live better. And I think the most honest thing that you can ask yourself if you're in this situation is like, how did I get in this situation in the first place where I owe too much on my credit cards? I've overspent. There's too much month at the end of the money. And what are you going to do to improve that? Because using your home equity as this cosmic cash machine to always pull you out of debt is eventually you're going to run out of equity at some point. So, if that's the reason to consolidate debt, you want to really try to remedy why you're in that situation to begin with. Um, Another thing that I think you want to be cautious of is that if you are doing a renovation, are you over renovating for your area? Like, for example, you have a $400,000 house and you want to totally renovate it, but your renovation costs are going to be three, $400,000. Is your house going to be worth the end result? And if it's not worth the end result, are you happy to stay in that house until it is, right? Because you're probably going to have to live there 15, 20, 25 years to recoup any of that money. And I totally understand that people love their neighborhood and love their area and their kids stay in the same school. So, like, that's a personal decision for somebody in that particular situation. The other thing that I just caution people, if you are rolling in your car payment or are refinancing to buy a new car, maybe you're going to get a better rate on that, is this new loan is going to be amortized longer than what a traditional car loan would be. And there's different schools of thought on that. Like personally, for me, I like to have maximum cash flow so I can maximize my savings, my RSP contributions, my TFSA. Like that's my philosophy. But I mean, it's a personal philosophy. And I think if you go through some calculations empirically, you'll be able to decide on what's going to be best for you and your family. And that's what we're here to do as your mortgage broker, is to help you with those calculations.
So I think a super important note you kind of alluded to there is going over your budget, right? And we alluded to that in a previous episode, but it's super important, right? If you go over your budget and maybe you're overextended or you want more cash flow, like you said, refinancing could be a great tool and option for you to to make that happen, right? So I'll pivot to you, Derek. How often should homeowners look at refinancing or just look at their mortgage in general?
Yeah, that's a great question. It's very personal, right? It depends on the situation where you're at, where your finances are at, and what your goals are, like Peter was mentioning. So, if the goal is to save as much on interest payments as you can, then you don't really want to refinance all the time, because every time you refinance your mortgage and take out more equity or increase the amortization, you're just going to end up paying more and more interest every single time. The way a mortgage payment works is at the beginning of your 25 or 30-year amortization, most of your mortgage payment goes towards paying off interest. And as the amortization gets smaller and smaller, the portion of your mortgage payment that goes towards the principal gets larger. So every time you refinance and go back to 30 years, you're just that interest portion of your payment just goes up and never really goes down at that point. So I would say be very careful with how often you refinance. As Peter mentioned with your budget, and you mentioned with the budget, keep on top of it, right? Because if you're not keeping on top of your budget, you're going to find at every renewal, you're going to be thinking, oh man, maybe I should refinance my house and pay off all my debt again because I've racked it all up. So the idea is to hopefully not rack up your debt often, so that way you can just kind of use refinancing as a tool to, I guess, reset and get you back on track.
Can I just jump in with one more thing
Mhm.
to pig or to piggyback on Derek's thought? Is like we're coming out of this period of time where after the pandemic, house prices, if you bought in 2019 or even 2020, the chances of your house increasing in value is really great. I mean, we bought our house in 2019 for was about 700,000, and then we ended up selling it for over 1 million just 5 years later. And we're seeing that even in our own customer base, people are paying 350, and the value today is 450, 500. Like there's massive increases in home value. So there's a lot of equity. So if you these periods of in time these periods of time where we see this rapid growth, and like here in the prairies we kind of get dragged up to the Torontos and Vancouvers of the world at certain times. Like I remember when this happened back in the 90s and early 2000s. um the thing to remember, if you are refinancing or are planning to tap into your home equity, like these like double digit home valuation growth, the growth in home evaluation probably isn't going to happen again for another 15 to 20 years. So you really want to take control of your finances right now, because you might refinance now and then find out in 2 or 3 years you do see a small dip in the valuation of your home. Like you really want to take control of these finances when you can.
Right. And that makes sense. So I think that pretty much sums up refinancing in general. If you guys have anything else to add, that would be the time.
Do you, Derek?
No, I did have a thought earlier and it's gone. So no.
Okay. I just wanted to tell everyone is like just don't jump into refinancing like blindly. Like make sure you contact a mortgage professional like us at Mainstream Mortgages. We'll guide you through it, and we can sort of show you like what the difference is in your interest costs. We can help you prepare your budget or give you a copy of the budget worksheet that we use with all of our clients. Because I mean, I've said this before in other episodes that like uh, an ounce of prevention's worth a pound of cure. So if you can figure out, especially if you have a spending kind of issue and your budget's always in the negative, like you really want to figure out how you can turn that into a positive. Um, and then also, if you are planning on renovating, like make sure they're reasonable and you're not going over the top because it's really easy to overspend in a building situation. You walk into the design center or the kitchen gallery, and it's pretty easy to rack that $40,000 kitchen renovation up to 120. It's very simple. That's my only thought.
Yeah, no, that's a good point, Peter. You mentioned make sure you talk to a professional with before you refinance because I think that's a really, really good point because I was just also thinking that a refinance might not even be the best solution for you, right? There are other topics or other products out there that I'm sure we'll talk about. A reverse mortgage, for example. If you're retired, that could be an even better solution for you. So yeah, I mean, I guess that's all I wanted to kind of add in there.
Well, great. So I think the main point here is that refinancing can be a super great tool for homeowners if used correctly and used to their advantage, right? So I think that'll conclude today's episode. Again, if you need any help with your mortgage or refinancing or whatever it might be, you can contact us at great rates at mainstreetmortgages.com or 431-482-2187. But we'll catch you on the next episode.
Bye.
Bye bye.